I love this conference so much. It's the best. So thanks for coming. We got a pretty exquisite group of people here, and since we don't really know what hyperscaling means, we'll maybe attack it from a couple of different angles. Sort of see how we think about it, how we think about funding companies, internal growth, when companies grow too fast, and then whatever topics you guys come up with, yeah? Got 30 minutes. Sakshi, do you want to introduce yourself?
Yeah, my name is Sakshi. I'm at SoftBank Vision Fund. I've been here for about 3.5 years. Spent the first 1.5 years in Silicon Valley and moved to London 2 years back. You know, very excited about use of technology in life sciences, logistics, education, fintech, basically any market where you can use technology to kind of make it more intelligent and be a market leader in it. That's me, and very excited to study Europe in more detail and find companies that'll be a fit for us.
Cool. PJ.
Hi, I'm PJ. I'm with Northzone, VC, European VC with roots from the Nordics. We've been investing since '96 in quite a few of the successes coming out of this region, but as of the past 10 years, we've also looked elsewhere, like in the rest of Europe and also on the East Coast of the US. We are early stage. We do Series A and B predominantly, and that's why we seldom meet each other than when we are trying to show the great companies to the SoftBanks of the world. Yeah.
Cool. Carlos.
So I think we're going to follow a theme here where I show PJ companies. So I'm the smallest fund on the panel. Seedcamp is 12 years old now. 350 plus companies. Some of the names you might recognize are UiPath, Revolut, TransferWise. We've backed your brother on Vitra Labs, replacing real leather with lab-grown leather. And what we love is super early companies that are building global businesses. We've done four or five companies just recently with the Danish Pre-Seed Ventures fund here. So very active in the space. Go visit Whisper AI, which is one of our companies that's over there. But basically anything that is pre-Series A, that's what we like to do.
Cool. How much money do you have under management?
So our current fund is £60 million.
Yeah. And PJ?
Current fund is about half a $500 million.
And Sakshi?
$100 billion.
100 billion is not quite the total amount of venture capital that everyone else has, but it's it's not too far, yeah. So
it's like half the Swedish GDP.
That's a nice way of putting it.
So famously, you guys are sort of. People say that you've broken the VC model, or at least tried to. But of course, that's interesting for this topic because with $100 billion, you can really put a lot of money into companies. But what is really high growth? Carlos, maybe if you want to start, like what's a company that grew really fast, sort of while you worked with it?
Yeah. So I think one of the topics that we were debating offline was this idea of is hyperscaling customer-led or is it organizational-led? And I think our earliest growth story was TransferWise. And if you look at where they started, which was a combination of Estonia and London, the amount of regional offices and the volume of transactions showed product market fit so fast that the speed at which it raised subsequent capital, and then of course now being $3+ billion in valuation, that's a 6-year journey. But when you look at that journey compared to
that is decently short, by the way.
Yeah,
that's just
it's crazy. Happen. But when you look at some of the journeys like UiPath, it's like half that in some ways. So hyperscaling, I guess, could be defined as is it the compressing of growth curves and money raised and revenues generated, or is it the staff? Because it would be good to hear your story.
Sure.
But I think maybe that's part of the conversation is it external or is it internal organizational development?
Sure.
Yeah, I think we're our most brilliant example is probably Spotify, which we came in already back in 2008. And I saw the journey from the board seat for about 10 years. And what was so compelling to see that I think it was both in a way driven by the consumers in the fact that the consumers really embraced the idea. But I think that the business model really needed to catch up over time. And that was the reason why it had to be organizational and capital intensive also. Now I think 13 years later, they're at the place where they have massive scale, where the unit economics all make sense, and where they can continue to scale with capital balance. But I don't think that is really an option at the early stage.
Sakshi?
Yeah, so I'll give an example of a company that no one has heard of. And the reason is because I truly see it as a hyperscaling example. And when I think of hyperscaling, I think of number of users or number of delivery, like one of the KPIs that you use to measure yourself as a company. So it's a company called Logi. It's a last mile delivery company based in Brazil. Brazil, when we invested, had a very sort of nascent tech ecosystem. Serial entrepreneur, first time around, he tried to do something in ride sharing. It didn't work out, but he took all the lessons and started this company with really solid unit economics. Like his margins on his e-commerce deliveries were like 40%, which is like never seen. I mean, we track companies on a global scale, so we know the different last mile delivery platforms and the margins and stuff. So when I saw this, that was quite amazing. So we invested, and I would say just over a year and a half ago. In about a year's time, the company went from doing 10,000 deliveries a day to today doing almost 100,000 deliveries a day. And guess what the margin is? Like, it's about 20%. So the whole idea was, well, you've got this model, it works really well. If you get extra money, you've got so much flex in your margin that even if you drop it to drive the market, you'll still have a very solid business model, but you're just going to hyperscale and be a market leader.
Sure. So I co-founded a company called Unity, which I led up until 500 people, and now it's led by another guy, and it's like almost 3,000. We grew quite fast because the revenue was there, but we didn't have the capability in a way to invest more. We raised the money, but that was just for padding, not to spend. So while I ran the company, we never spent anything. And I sort of regret that because we could have grown faster. We could have done more things. The new CEO, he came in, he built a much stronger exec team, and now we've been able to spend quite a lot of money. And it's very worthwhile. So I'm actually, I've said sometimes that break even, which we were for a long time as we grew, which is, by the way, not everyone can get there. That's nice. But break even is sort of either you or somebody else doesn't believe in your business, right? And we sort of believed in it, but we're not kind of confident enough to really push it. So I quite favor spending money when you have kind of the right setup. Do you have stories where you regret not spending more?
Well, maybe this is a good point to take what you said and open up the debate on, is hyperscaling where you grow a company with negative unit economics to get it to a certain point and then hope that somebody else funds it, or is it positive unit economics? Because the story you were sharing was more of a positive unit economics story, and I think we've both been on the receiving end of businesses that require sort of the Blitzscaling, which I think is a variant of your question, and we've struggled with that because I know that he's my customer in a way, and by extension, the SoftBank fund, and it's really tricky when you're spending money that you don't really have too much of as a smaller fund, backing businesses that are not scaling, in a positive unit economics way. So I think for us, we appreciate that the sort of idea of blitzscaling, which I think we were discussing. It's a really tricky one to execute in Europe, and so therefore we tend to like positive unit economics. And there are cases where maybe a negative unit economic business, network effect driven, could have grown faster, but then you have the risk that when you go fundraise again, there isn't much to show to validate that there's product market fit at the monetized level.
Sure.
I think also there is a tremendous amount of risk in the concept of blitzscaling. Has anyone read the Reid Hoffman book about blitzscaling? And the concept is that it's worthwhile to sacrifice efficiency to grow faster. You know, that's the simple idea behind it. But there is much more complexity behind it than what it seems. And the most important one is that the first core of the company, the founders, they go through a pretty tough period to form the company, to recruit the first people, and they're sort of ingrained with this idea that we need to survive. But when you start to scale, and if you do the blitzscaling trick, then there is a very big risk that you will sort of fuck up the culture and think that people, that there's unlimited amounts of cash, you don't need efficiency, and you actually really don't need to think through the processes because you will fix them later. And that, I think, is what kills a lot of companies. And
do you have a good example that you can talk about?
Well, yeah, I think that we have experienced that in the review process of a few companies that we luckily decided not to go further, because they were showing these signs that we didn't understand anything because it was all about growth. Whereas I think that fundamental, understanding that the unit economics may not work out in the beginning, but there has to be a very solid plan and a shared idea about, okay, this is what we're investing in to get to a different stage. But if sort of spending is the only means of reaching the target, then you can actually undermine the long-term success.
Sure.
Yeah, I agree. I mean, imagine sitting on any side of the table and reviewing a business model which shows everything negative in terms of margins, but it says, hey, we'll get there one day. With your money, we'll get there one day. And what would your response be? It would be, okay, we'll wait for that day and we'll come in then. We'll pay up the price, but we'll wait.
It depends on the confidence you have, right?
Yeah.
I mean, when things are working, you need to get to a certain point. Like at some point, you have a curve, upwards turning curve ahead of you.
Right.
And the stronger your confidence in that curve, the more you're allowed to kind of spend the mirror image of that curve.
Right.
To get there.
Yeah. Yeah. So I was imagining, if you're thinking of a J curve, I was imagining at the bottommost peak of the J, right? Where you're looking at sort of negative, and maybe in the whole kind of consumer business, it may work differently, like the whole network effects and all that. But I think on the B2B side of things, it's very hard to pay up a premium being a late stage investor for sort of negative margin businesses, at least on the business to business side.
Makes sense, yeah.
But I think also in terms of really quick scaling, it's about also being prepared to take a lot of tough decisions about really changing and killing your darlings on, and in the case of Spotify, they changed the basic platform maybe 4 times during over an 8 to 10 year period, where they just realized that
the software stack.
Yeah, where they realized that the path they were on, where they could sort of make it more efficient, but it would eventually run into a wall from a scaling perspective. And those were pretty big decisions, such as that they were very much desktop focused for quite some time, and then realizing that the entire mobile shift actually was, both in terms of the business model that they had chosen at that time, would eventually tap out their growth. And they had to both convince the consumers and the content owners to switch the model, and needed to take a substantial investment to make that shift. And if they wouldn't have done that and been sort of ahead of the ball, investing a lot of money into that change, they wouldn't have existed today. And that happened, 4 or 5 times.
What kind of investments did you have to make
Well, basically, they had to build up more or less a parallel engineering team working just on the future, and then an engineering team working on the present product, and that obviously almost became an organizational challenge in its own right. That am I working on something that is about to be decommissioned or something for the future? That's from a motivational standpoint, that's also hard to manage.
Just to add to that, I guess we've covered business model, we've covered tech stack investment, and I think maybe the last one to sort of touch the subject is people and HR. I think from a hyperscaling point of view, the thing that seems to be the biggest pain point, because I did an interview of 5 companies that were going through this process, and almost all the answers came back with people-related issues. Everything from the founders' roles shifting from operators to managers, finding and recruiting and keeping the right talent and not getting poached off the big players, because the bigger funds and the bigger startups start poaching your, especially when you go to Silicon Valley, and then you start having distributed teams and how to manage that. So, that's probably the last thing that trifecta of the hyperscaling, if you will.
Yeah.
Yeah.
Yeah. Somehow, yeah. I managed to build the company to 500 people, and then I didn't know how to grow it any further. Like we didn't have a process for hiring. We had very informal recruiting, and we just at some point we were just treading water. So the new guy came in, built a system, 20 people recruiting team, then you can grow. Yeah.
Yeah, the hardest part for most, in the audience, how many are in a startup with less than 50 employees? Please raise your hand. Yeah, that's a pretty sizable part. And I think that is that's the hardest scaling part, I think, we've seen. When you go
that's the easiest.
If you go to 20 to 100, in our experience, that's when most founders will test the limits of their capabilities in terms of working through others. And when that happens, if that works out successfully, then going from 100 to 500 is much easier.
Okay, that's actually true.
But I think culture does play a very big role, for sure.
Yeah. I mean, some of the anecdotes that I got were really interesting. It was the point when the founder couldn't remember the names of people, and that started becoming a problem. As you mentioned, PJ, like the trust in somebody else to then transfer things up, and culture being a huge catalyst for the organization of that. How people make decisions when you're not in the room is the best description I've heard of culture.
Yeah.
What happens is, having one direct report relationship is fine. Then we have a middle layer of managers. And have you ever seen a chaos pendulum? That's basically what starts happening. Like you don't know what's out there.
Yeah.
Like somebody's telling you something, and is it true or not? That's anybody's guess.
And sometimes I also feel like it just takes like one B to hire a B, because a B will then always hire a C and a D.
And it's fans
and
out.
It's almost like an epidemic.
Yep.
So I think culture plays a really, really important part.
Sure. So how do you think about bringing all this capital to the market? You must have done a lot of soul searching and how to.
Wow, a lot
how
of
to what? I don't know.
Yeah, I mean that's a heavy question, but the way I look at it, I actually almost feel. You mentioned earlier that you broke the VC model. I almost feel the opposite.
By the way, I don't claim that, but it's definitely been said.
No, I understand what you mean by it, but I almost feel the opposite way, because I feel like, especially in Europe or like parts of the world where VC capital hasn't been available in abundance, you are very careful in picking the companies you back, because you're always thinking about your exit potential. Whereas now you've got, this big fund who's looking for late-stage companies. So I feel like we're almost encouraging the VC community. And we've seen this, the SoftBank effect, where we feel that the VC community is taking a lot more risks on companies because they feel that this could be a potential exit to us. I think we've done well for the entrepreneurial community, because they can see us almost as an alternative to an IPO in a good way. You can be private for a longer time and do stuff like this, which is like spend money on a parallel engineering team almost as R&D, because you believe in the future and you want to be alive in the future, right? So you can do stuff like that. You can't do it if you were in the public markets, right? Like back in the day. So I mean, that's kind of how we see ourselves, and you know the story. I mean, we are long-term capital. You know, we've got an operational group, so we're almost like I've never said it before, but this is kind of my interpretation. We're like Andreessen Horowitz, but like on a huge scale. So we've got like an internal operations group. Once we invest, they work with our companies, and their sole job is to make sure that this company is connected to all our 83 portfolio companies today, and they work with each other to increase the pie, you know, increase revenues for everybody and benefit from each other. We help them do JVs in Asia. Most of the companies don't know how to enter China, for example. It's just such a black box, and it's a huge.
It is
market.
unbelievably hard.
Right, it's very hard. But you know, given our kind of operational base there, you know, that's something that we can really help with, and it goes a long way. India, you know, we've got offices now almost everywhere: China, India, Abu Dhabi. We've got 3 big offices: Tokyo, London, and California. So, you know, we think that's sort of the way we look at things.
Yeah. One footnote is that there is a Slido, and we can take questions from there. We'll try to get a few. We're not quite there, but put them in, and we'll pick some. When you're working with your entrepreneurs, do you find that you are the one pushing them to grow faster, or are you the one holding them back? Like, who is pushing who?
Oh, that's a good question, because I think...
But I sort of imagine that might be different between the three of you.
I think the really successful companies, they typically create North Stars that are incredibly challenging. And
really far away.
And where you can almost feel like, oh, wow, will this even be possible? And then you need to chart the course and make it possible because of available capital and such things. So I think that most of the time we are probably tempering the growth trajectory due to sort of realities that we see. Okay, we see that, you know, going into the US market, in order to do that and win that market, it's not enough to put $5 million to play. You have to invest at least 20 million to get the right kind of resources to play and the right type of distribution sources, etc. And so it's sort of we are sort of checking the assumptions, I would say, and that sometimes has a holding back effect. On the other hand, if you see that it really is prime time, you know, we really like to see them go 100%, or even more than 100%. Yeah.
If I answer your question from a mindset point of view, I think if it comes down to the investor to try to imbue that mindset, I mean, I think you're not really going to achieve the end goal. I wanted to understand this issue more deeply, so I started interviewing organizations that have high-performance individuals, and one of them is the Special Forces, you know, military Special Forces. And I asked, and it really came down to one thing, which was selection. It wasn't like after you were selected that there was a lot of things that were put on you that made you have vision or have perseverance. Or it was actually something that you had within your intrinsic mindset. And so I think if I take that and I apply it to investing, it really comes down to finding founders with that vision and that grit mindset, more so than trying to imbue it as an external party later.
That makes sense.
I think we're slightly different. Where I mean, by the time you know these companies come to us, they're already you know quite well developed in their business model. They have a black book that works at a large scale, and now it's time to hyperscale. So we're always encouraging them to, you know, well, there's a large round that you will raise, and you can use that and kind of going global.
Yeah.
So like I talked about, you know, Asia, like expanding in there, or you know, other different markets or different products, which make sense. So I think we're more on the other side, sort of encouraging them to go faster.
Is it true that you as a group would say to founders who are raising like, you know, $50 million, what could you do with 200?
Yes.
Yes.
That's true.
Which is a healthy exercise in any case.
Yeah, because I feel like before us, like no one really dared to ask that question.
No.
right? And I feel like that's almost like a blind spot for the entrepreneur because he's never thought like that because no one ever asked him that question. So when you ask him that question, I feel like it opens a different channel altogether. And he's like, hang on, I could actually achieve that much. That's cool,
And I think actually now, as opposed to when I started in this industry 20 years ago, we're accessing so much bigger markets. Like we were investing in software companies that were selling software to banks. Now we're investing in software companies that are banks and actually replacing banks altogether. That means that the market opportunity is 1,000x the size, and also deserves the kind of capital, 1,000x amount of capital to create those kinds of market positions over the long haul. I would say that
we're all part of an industry that's been growing double digits for 50, 60 years.
Yeah,
it's unbelievable.
It's pretty amazing because I think at the end of the day we are seeing a massive shift where I think SoftBank kind of capital sources is sort of the final piece of the puzzle to really, that what we're trying to displace is not Revolut. It's like we're trying to displace HSBC or something like that. That's the competitive set. Yeah.
And when you do that, eventually you'll need more than a few $1 million. Yeah.
Well, you know what?
Can we get the slide over here, or can you read the questions?
Yeah, no, but I think that there was, there's one about the financial climate, but maybe the last 2, 3 had to do with the hyperscaling HR structures, and maybe piggyback off of the first question you asked and to try to answer these. One of the interesting things, that we noticed was that, yes, founders can have big visions, but organizational development internally and compensation plans can cripple a company. So we had one company that fell apart. It was actually doing really quite well. And a post-mortem showed that the organizational structure was around micromanaging a lot of the employees, never delegating. Everything had to go through the CEO. So I think sometimes it's not just about the vision and having these big ideas and wanting to take over the world. You have to be careful. I mean, we have cult of personality CEOs that are celebrities now, like Elon Musk and whatnot. You have to be careful that with the talent that has a choice as to where they want to work, you can't set up hyper-rigid structures that resemble a Steve Jobs type format, because you will lose talent and companies will implode.
Mm-hmm. There was actually one that I would like to answer, and the question was from Morten. For an early stage B2B startup, what's most important? 1, idea product, 2, team, 3, existing customers base, 4, business plan. And since we do early stage, for us, the team is by far the most important factor, and we actually see a review process as basically that where all the proof points are manifestations of the quality of the team rather than anything else. So the business plan is a manifestation of something, and the progress and what so everything sort of comes back to that particular question. So how strong is this team? And all the others are supporting facts for that.
Makes sense.
I'm going to take that natural pause and a
yes.
huge round of applause, please.
Cheers. Thanks, guys.
Thank you.
Thank you.